We've been trying to make sense of this for now, well, it feels like basically all year. Michael Novogratz, who's starting his own fund,
Sure.
$500 million fund, just went on television last night, said he thinks it could go to $40,000 in a year. Now, some people say he's talking his book, you're starting a fund to do this, but others say, you know, maybe there's something to this. Where do you land on all this?
Well, you know, I think the analogy a lot of people like to use is that we're still in the early days of this technology adoption, and it's similar to the early days of the commercialization of the internet. And I think that's pretty accurate. And I think in some ways, if it was, 1998 and you were saying, hey, this web thing is really going to drive a lot of value, but some people would say, well, it's overhyped and it's not really going to deliver. And there may have been a bubble then. In fact, there was a bubble. But if you had invested in the key infrastructure companies, platform companies at that time, it would have realized enormous gains.
Okay, so now you're talking your own book. So no, in part because of what Circle does, and we should probably explain what Circle does. But just on the currency piece,
absolutely.
On the currency piece alone, which is to say, is this the tulips of our age?
Yeah, I don't think so. I mean, this is a fundamental breakthrough in how record keeping and the settlement of transactions happens in the world. And it is going to touch every fiduciary industry that exists in the world and improve it and automate it, drive value. And it's tokenized, meaning that there are assets that power these platforms. And so I think the question is, how broadly do these platforms get used to replace fiduciary trust applications that exist today with people and paper? And as that takes place, as these ledgers and the transaction systems they power grow, what's that asset worth?
For those of us who don't understand it, I want you to take it down literally to like first grade level here, okay? Because honestly, there's a lot of people in the world, including myself, on some of these issues that still don't get it.
Yeah.
Let's just do, what does Circle do first?
Sure. Yeah, so Circle has a few things that we do, but the primary thing that we have is a free payment app. So if you want to pay someone anywhere in the world instantly without fees, without FX margin, you can do that. You can think of it as like a global open alternative to an app like Venmo, but it works using cryptocurrency technology, and it works across currencies.
How do you make money on that if you're not charging me fees?
We don't make money on that any more than Google makes money on providing a search engine or email services, or Facebook makes money sharing photos.
The way you make money is then doing what with that information?
So the strategy we've always had is how do we drive a lot of adoption of these free products, and by building on top of crypto, there are other products that we can offer to consumers that are based on crypto, but other financial products. So we make money by trading in crypto itself. And so we make considerable amount of money doing that, and providing liquidity to the market in crypto. And we're working on a new product, our next major consumer product, which is a way for the average retail investor to invest in crypto assets.
But it's got to be a lot trickier when you've seen these skyrocketing prices for Bitcoin and then the plummet that goes through. In fact, you're not doing what you used to do with that anymore, right?
We never created a model that depended on the price, right? It was never a critical piece to it. What's important is that there is a marketplace and that there is liquidity and that it is a tradable asset.
So that's the question, though. How much liquidity is there? People say all the time, yes, you can buy in, but if you actually were one of these people who invest in and now you want to get out tomorrow and you want to sell a lot, that actually is complicated.
Well, that's where folks like Novo and others that are moving large blocks come to liquidity providers. Circle is a liquidity provider. There are others. There's a company feature in the Wall Street Journal yesterday, DRW, which is that. And the market's maturing. Obviously, other traditional broker-dealers are getting into this space.
And we're hearing about the Goldman Sachs and JP Morgans who may get into this space. Again, go first grade level for us, if you could. Just the difference between Bitcoin and Ethereum, just so everyone understands it one way or the other.
Sure. So, of course, Bitcoin was the first cryptocurrency that gained some widespread awareness and adoption. And people like to refer to it as a digital gold. It is a system to store and transmit and keep records of Bitcoin. Ethereum emerged out of frustration with the pace of development of the Bitcoin technology. So engineers were frustrated and wanted to see some new capabilities in crypto. In particular, the ability to not just have one token, but to have a system that could have lots of different tokens. So you could have a cryptographic asset for, say, a car or a house or a stock or a bond or a fiat currency even, and have those tradable and exchangeable on a blockchain. Ethereum made that possible. They also made it possible to write software or business rules, contracts that were connected to these assets. So you could build, say, a bond with the rules of the bond expressed in code and tradable and liquid and exchangeable on these platforms. So Ethereum is a much more sophisticated infrastructure.
Right.
The next generation of Circle Pay, we're actually building on Ethereum.
Okay.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.